Yes, morning everyone. So this is part 2 of the 2 video series, The Dollar Crashing, Is Bitcoin a Viable Investment? This is part 2. The first part was the one I did. I just read some excerpts from some professionals, some experts and traders and investors, and going to apply that now to the charts and the way I do my charts. And basically the main point of this video is I want to show you how I come to conclude my projections to where Bitcoin will go in the next year and a half or so. And yeah, and I'll be using a couple of different charts to show you that. But before I do that, I do want to say one thing. From my last chart video, which would be video number 20, what would it be? Video number 22, I think. Let me see here. Yeah, video number 22. I was talking about, do you stay in Bitcoin? Do you go into the altcoins because it's altcoin season now, etc., etc., etc. If you're in Bitcoin, really, it's not going to hurt to stay in Bitcoin. I like to flip back and forth because that's what I do. That's what I've been doing, and it's been working well for me. But to simplify your life, Bitcoin's going up. Okay, it's not going away. It's not going anywhere. It may fall again. It's hit 20,000, and so it up here. So it may fall back. It has been following this trend line here. It may fall back to this trend line here, and back and forth for a bit before it finally breaks at 20,000, and then basically to the moon. So you can't go wrong with Bitcoin. So I just want to make that clear from my last video, number 22, not my last video, but number 22 of the chart video that I did. If you're in Bitcoin and you're not sure what to do, just stay with Bitcoin. You can't go wrong with that. Or Ethereum even. I mean, Ethereum is a very well-known one. Okay, so that being said, let's get on with it. So here we are on the Bitcoin US dollar, Bitcoin dollar chart, and we're on the weekly. So we can see here, if I just widen this out a little bit, that it has indeed hit this past mark, and in fact it popped up just a little bit above it. And in my last video, chart video, number 22, that's what I was saying it would do, or possibly do, and that's exactly what it did. It followed that. If we just zoom way out, it broke out of this little triangle. Here, I'll go to the daily here, and actually we didn't do the 4 hours. Show it better on the 4 hours. So it did do that. We were inside this triangle. I remember I drew this line, these two lines here, resistance, support, and it was in a flag. And I said if it breaks out, it may try to make 22, but it may fall back to some point, basically following this trend line. And then it basically did exactly what I thought it would do, and it now has indeed hit the 20,000 mark or the previous high, and actually poked through it just slightly here, but has fallen back. So my thought in that video was that it would follow this. Sorry, I had a frog in my throat. That it would follow this trend line here, which it has been following pretty much all along. And it may go along here for a while. It may decide to break above, or it may decide to break down below, in which case if it does break down below, it would likely drop down. If it drops down to here at this point, likely drop right through to this trend line here, which is a little bit shallower trend line. Or it may just stay in this channel following this support line until it decides what to do. So that's where Bitcoin is right now. So, but this video is in conjunction. It's part 2 from the last video on, is Bitcoin a viable investment? In other words, is Bitcoin going to go up, and how high can we project it to go? So with that being said, I will first show you on this chart. We'll go back to weekly, and you see this. I showed in one of my videos earlier this these blue lines here, and what they're called is bars chart, I think it's called. Let's see, bars pattern. Okay, and what I did to get that, now if we look at that, we'll see it basically follows the cup of Bitcoin, which, by the way, we are finished the cup, and Bitcoin is now, that's why I say it's probably going to bounce around here, come down, whatever, before it actually breaks that 20,000, because we are finished the cup and we're now forming the handle. And if you watch any of my previous videos, I'll talk a little bit about the cup and handle and what to expect. You'll see more of that. Actually, you'll see that really better in the next, a little bit later in this video. But first, this one. This is an overlay pattern from the previous cycle up to 20 previously the beginning of the previous cycle, actually. So there's the high, and so my target prediction for Bitcoin is to reach somewhere around 300,000, 320. And you'll see in my other, I'm going to show you the other video, it's more of a ballpark figure of 250 to 300. But this here comes from this thing called, I'll just show you real quick here. Well, it won't be that quick, but it's called the bars pattern. Okay, and what I did is I took that. Let's see, how did I do that? Yeah, okay. I took it from, where to go here? Find that again. From this high back in December 13 to the low of this run, which was about here. And it doesn't matter whether you actually just whatever, you just pull it anywhere to match up to this, to the low here, which was December 10/18, and you get this pattern. Okay. And you can take that pattern and you can move it all around. Now you can see that it's exactly the same as this pattern here. And then all you do is you scroll this way, pull this so that this point, find your high point, which is December 11/17, and you put this point on December 11/17. So somewhere around, there we go. And then you try not to stretch it out this way, but what you're going to do is stretch it out this way. Okay, and so what you do is you go way, you scroll everything, squish everything way down because it's going to go high. Then you grab the end one here, the other end, and you just pull it down, pull it up, go up. Pardon me. You go up, 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 up. I won't go all the way because I don't want it to mess up the other one. Okay, so you get the idea. So you keep going up, and then you come back to here, and you get that to where it matches pretty close, and then you put that point up there. I'm putting that point up there, And you keep doing that until this comes down and matches to the bottom, the low. This low, or these two lows really, this one's just a real, it just shot down, so I'm not even taking that. But take these two lows and match them to this low here, right? So that's what this one is doing here. So I'm going to get rid of this one now, and you'll be able to see more clearly. So at this one here, I have those lows. Oh, they've moved a little bit, but it gives you an idea. So they are a little bit above this low, but it gives you an idea. And so it matches the pattern. And then as long as you have this start point here and the end point didn't move from where you had it, where it lined up, in this case December 26th, 22nd, then you get your target. And there it is, about 300, I'd say 300,000. Okay, so that's how that one is done, the overlay. So in the last video, that fella Raoul talks about how he used the overlay pattern to get his projection. Well, that's basically, I'm pretty sure that's what he did. I didn't phone him up and ask him, but I'm pretty sure that that's what he did. And yeah, so that's that part. So now I'm going to move to the next video, and or the next chart should, pardon me, just go here. And this is another chart. I didn't want to do all this over top of the chart that I have, that I'm using mostly. So this here is the Quanto swap on Bitcoin. And the reason why I chose that one is because it too goes all the way back to September 11th, even goes back further. So that's why I use that one. Now on this one, the way I did this, and first of all, I'll show you the cup and handle technique that I use. But the way, and I'll put it into a logarithmic chart. This is on the auto, so it's true to scale right now. But if you put it on logarithmic, it's based on a percentage. Okay, so I'll show you the difference. There's logarithmic. Okay, logarithmic scale, normal scale, logarithmic, normal. So it's a lot easier to see things when you're zooming out and and taking a wider picture. It's a lot easier to see things on a logarithmic type chart. So now, first of all, before I get into the lines and these things here, I'm going to show you what I'm talking about, cup and handle. So let's start way back here. That's what each of these little guys, the little circles that I did, are basically handles. So I'm going to start way back here and stretch this out a little bit. Okay, and it's easier to see if we go to the day, I think. Let's go to the day. And so we have to scroll all the way back. Let's zoom this out. Scroll all the way back. Back to okay, so here we are. This is all the way back to September 11. So cup and handle. I've talked about this before in other videos. Coming down off a higher point, and then it drops, and then it finally finds its bottom and begins to rise again. This forms a cup. Okay? And oftentimes, in a cup, at the bottom of the cup, you will find a shape that looks similar to a W. Here's the W here. Okay? I'll circle it for you. Here's the W right there. Okay? Now, Bitcoin way back then was thinly traded, very thinly traded, so it looks kind of funny, but that's what we look for, is a W. And then in the W, we find a lower, and usually the second elbow, this is the first elbow, the rise, and then the bottom elbow, a little bit higher. It doesn't quite come as low as the first elbow. That's a W. It's also known as an inverse head and shoulders. So if this was the top of it, so if the price was rising, it would be called, and this was inverse, it would be called a head and shoulders, which is an indication that price has reached its top and it's going to fall, going to retrace. I call it an M. It makes more sense for me to call it a W, an inverse, an M. Anyway, at any rate, we are dealing with Bitcoin, and we feel that Bitcoin is going to rise, so we're looking for W's. So that's the W. Now, and the bottom of a cup is oftentimes this W formation. So we know it's going to rise. Now, at the end of a cup, there's almost always, it reaches a high point. So this is where the support is. It dropped through that, created this cup, and this tries to come up to that previous support and broke through, is now resistance. It's resistance here, it's support here, it's resistance here. And it falls back a little bit and does this little thing, back and forth. And that's called the handle. So there's the cup with its W shape in it, and here the handle is formed. And anytime you have a combination of the W or an inverse head and shoulder and the handle off the end of a cup, it's an indication that price is going to rise to some next level of resistance. Okay, so I'm going to get rid of that. And I'm going to scroll out. Oh, let's get rid of that, and let's go back here. I'm going to scroll out and show you other cup and resistance. This one really is not much of a, it is a cup and handle too, but it's kind of, you know, it was thinly traded back then. I mean, you could look at that, and it took a long time to get there. So that is one, I guess you'd call that. There's your cup, loose cup. You know what? I'm going to take that one out. Let's take that one out. It's not a good example. And then the price rose, and then you get fell back, and you get this kind of a W here. There's the bottom, and then there's the bottom, but it's higher than this one. And then you get up to this resistance area. Didn't quite get to here. There's a little bit of a handle here. Indication that when it breaks that, it's going to rise, which it did. And up to the next point, where it created a next point of resistance. And then it came back down, and back down, and back down, and back up. And then we have here, I'm going to have to go into the, zoom out a little bit to see that one. This kind of made it, there's the high point, drop down, there's the W, that point, and then this point, because and the reason why you're looking for that is because it's the bottom. It showed the bottom, right? So obviously this only works if you look back on history, but it does give you indication of where prices are going to go. So there's the W, and it comes up to this resistance now, which was this was resistance, okay, and it comes back up to that point. And so you have kind of a cup double handle here. It dropped down, and then it came up to this point, and then dropped down again. But notice each time you had higher lows. It didn't go as low. It didn't go as low here as it did here. So that's an indication that if it breaks past this point, it's going to go up, which is exactly what it did. And up it went to create a new high, somewhere around, and that was the 2017 high. Okay. And then it came back down from there, and back, we all know, oh yeah, everybody was screaming, oh, it's breaking down to 3,000, Bitcoin is garbage. But anyway, it broke down through this, it came down to this resistance point, broke through that, and created a W down here. There's a W here. There's the one elbow, there's the other elbow, and it came up. Then it created the handle, cup, and this is the cup. to this point here, and this is the handle. Then it went up to not quite as high, fell back, and it has created again a basically, well, you can take a look at this whole big picture where you would see that. Okay, now you take a look at this whole big picture, and here is the W. There's the bottom, first elbow, and here's the other bottom, second elbow. Now, interestingly, here it was COVID, and it probably would have only dropped down to this resistance and created that, or maybe even a little bit, maybe down to here somewhere, and created that, but COVID shoved it way down here. COVID affected everybody. And then it went back up, and right now, we are at that point, this point of resistance again. Back in 2017, we were at that point again. And so guess what's going to happen? It's going to create that handle. And that handle takes a bit of time to create. So here it hit, and it's going to do something along here, either drop back down, and we don't know how far it did drop here, but it might drop again, and it might bounce around here a bit before finally beginning its ascent. And we can look at that a little bit better on this other chart. And we can see here's a point of resistance. I took it from some point back here, and here's the trend line following. It's been following this trend line beautifully. So it may find its way here before it finally, and that's like December, mid-December, or it could break through that and create this cup and handle, or the handle going all the way down to this trend line, or even this support line, which is around 13.7 or 13.8 or 14 if it goes into January, thereabouts. The further in time it goes, less likely it will drop to this 13.7, and it will likely just hit this trend line. In other words, if it goes all the way out to February, say, then it likely 15 or something like that. Okay, but the point is it's going to create this handle first before it begins its ascent again. And you're going to hear people saying, oh, Bitcoin is garbage, it's falling again, it hit 20,000, it's going to fall again, etc., etc. Barring we don't have a same scenario as we did in the spring with COVID, where the world basically shuts down, it will basically stick around in this area before continuing on. Now, that's cup and handle and W's. Now what I want to get into is show you how, let's get out of the log, show you how, let's get back to this chart. And this chart I showed you the overlay, and it shows you a target of 250 to 300,000. This overlay, this is another way of doing the same thing, but you have to use a log chart. So I'm going to go put into the log chart, and I circled all these little handles off the cup. Okay, there's one there, one there, one there, little one here, which was formed for this guy, and then this one here, which takes in all of this big dude here. Same thing as this one took in all of this. Okay? From 2013 all the way to 17. This takes in from 2017 all the way to now, 20. Okay? So how do I arrive at my next in using this system? Okay, well then I use something called the, where did it go? Price range. Okay, the price range, which is what these are. So I found the move from each top of the handle, in other words, the resistance here, and the top of the handle here, and I put it up to the top of the next peak. Okay, so you get two things. You get time this way, and you get percentage this way. So for example, this one from March 6th, which was the top of the handle, to December 11, 2017. So from March 6, 2017 to December 11, to December, sorry, what do we got here? December 11, 17, you get a distance of months or weeks, if you want to call it, as well as the percentage of the rise. Okay, so what I did is I did that from this one to this point, and then I did that from this point, from this cup and handle off of this point here to this one. And this one was such a quick little, this was literally a month, so I didn't even bother with this one. So this one, I took this one, and I took this one. And what I did, I'll just show you that. Where is it here? Date range. Yeah, that's what it is, date range. So how it works is you just take it from, like, say, let's take it from this point here, and you took it up to this point here. And what it does is it tells you that from this point to this point is a, oh, I'm sorry, that's the wrong one. That's not the right one. That's the date range. I want price range. That's the one I want. Price range is, so I took it from this point and I took it up to this point here. So it'll tell you that from this point to this point is a 59.55% rise. Okay? So that's how those work. Then what I did is I added this one, 1460, basically 1463 plus 1340. I added those two together, and then I divided them by the 2, gave me a number, and I used that number, and that number was 1400%, and I used that number to project off of this high point. Let's zoom out here a little bit. Off of this high point, and I also took the distance. I averaged the time, and both of them were basically 8 months. This one's 9 months, the other one was 8 months. So basically 8 months, 9 months. I took it out. I think I took this one out from November 30 to August 20th, the end of August. So November, December, January, February, March, April, May, June, July, August. So 9 months. I took it out 9 months. And raised it 1400% because that was the number I came with. By adding those two and dividing them, I came up with 1400%. And then I just carried it out from this point, 9 months, and I got to there. Now, that gave me that. Now, oops. Now, if I follow, let's zoom out again, these, so I have, and then I drew trend lines. Well, I drew the trend lines first, actually. This point to this point. And let's see, there we go, now we can see it. So this high to this high and projected it out. And then I took it from this high, connected this point, this high, and then I projected it out. And I just happened to, and it just happens to match up beautifully with these bottoms, 1, 2, 3. So you got 2 highs, and so you got 1, 2, 3, 4, 5 points. So it's beautiful. So I just projected that out. And what we get, lo and behold, if we go out this far and go up to this line here, or this projected line, because this would now be a peak, this would now be a point of resistance to look for, right? We go up to this point, and we are now, lo and behold, at approximately 240, 245, 250, thereabouts. And 300,000, which is the one that the overlay gave me, right there. So it's very close, very close. And that puts us in, this is August, next summer, somewhere around $245,000, $250,000. If we moved out to the overlay took us to December, right, 20th, and we follow up to this line here again, this resistance line, there you have it, 320,000, right, over to the right, over here. October, November, December 20th, which is what that gave us, the projection, 320,000 thereabouts. So there we have it. Between 245, let's say between 240 by August next year to about 320,000 by the end of December in 21. So there you have it, guys. That's how I came up with my numbers, my projections, and the reason why the previous video the reason why I showed the other video, I did that reading, is because I don't want to, you know, who am I? I'm just a guy who reads charts. I'm good at it, but I thought I should read some excerpts from some other traders and investors who have been around for a long time and are trusted names. And their targets are basically bang on to my targets. Or should I say, my targets are basically bang on to their targets over the next year or so. So there you have it, guys. If you like this video, like I always say, if you like this video, what do I say? I tell you, trying to keep my thoughts is pretty, my brain goes all over the place. But anyway, if you like this video, hit the like button down below, subscribe, be really helpful. And I enjoy doing this. This is kind of fun. It does take a bit of time. I do have a bit of time on my hand right now, so, but it's awesome. So hopefully it's helpful to you guys. Happy trading, happy investing, whatever it is you're doing. And again, I just want to reiterate, it doesn't hurt just to stay in Bitcoin. You can't go wrong staying in Bitcoin. The other thing is, if you just stay in Bitcoin, it's a lot easier when it comes tax time. That's something I've learned. If you're involved in a whole pile of different altcoins, every time you flip in and out of them, those are considered tax events, at least here in Canada. So that's another thing. If you want to keep things simple, your life simple, just stay in Bitcoin. If you want to grow your account fast, then learn how to do what I do, and you can trade in and out of different altcoins to Bitcoin. Because when it does become altcoin season, which is happening right now, altcoins tend to go faster, percentage-wise, than Bitcoin. Enough said on that. Everybody have a great day. If you like this video, hit the like button, subscribe, and have an awesome day.